Hi everyone, a very good evening. You're watching The Money Show on ET Now as a part of India's Rise with India, ET Now's Rise with India Prime Time segment. I'm Mubina Kapasi, and of course the topic that we are going to be discussing today is once again related to how the world has been gripped with this epidemic of the coronavirus. India as well, of course, has not been excluded, unfortunately, and the government has been taking a whole host of steps to ensure that your life becomes a bit easier. What exactly are the steps announced by the finance minister yesterday? We are going to be talking about that, especially on the tax perspective. There have been certain extended dates that the government has allowed, assessees, tax assessees like you and me. What exactly are those? We'll be talking about that. Later on the show, we are going to be talking about whether your Mediclaim insurance will cover coronavirus. Do remember that even Prince Charles now has unfortunately been inflicted with this virus. Everybody must stay careful, but at the same time, of course, ensure that you're well protected. God forbid this virus should touch you or your family. That's what we'll be talking about today on The Money Show. Not to mention, we are waiting for the health minister as well to address the media very soon. But before we do any of that, here's a look at the headlines. Nation wakes up to supply chain disruptions, long queues outside grocery stores on day one of the nationwide lockdown. E-commerce players put operations on hold while retailers gear up for the mammoth task of smoother supply-demand chain. Positive cases mount over 500 and death toll rises to 10. After recording 504 deaths in a day, Spain becomes the new hotspot for COVID-19, surpassing China. Meanwhile, the pandemic does not spare the royals either. UK Prince Charles tests positive for coronavirus. Bulls defy lockdown as markets boast biggest single-day gains in over 11 years. Nifty surges past 8,300, Sensex adds 1,800 points on the back of broad-based buying across sectors. Positive global cues, hopes of stops from the Modi government fuel relief rally. A market stabilization fund may be in the offing soon. Sources tell ET Now that the government is mulling building a corpus of 50,000 crore rupees to provide cushion to the markets. That's an ET Now exclusive. And yet another ET Now exclusive. Sources say the economic stimulus package is all set to be finalized by the end of this week. The government and the RBI are mulling to hike the borrowing program, widen fiscal deficit by 1% to help the needy. The stock price of Reliance Industries surges a good 14% as reports suggest that Facebook is all set to acquire a 10% stake in Reliance Jio. Deal which was set to unravel by the end of the month has of course been hit by the COVID disruption. The deal, remember, will help make Reliance Industries debt-free by March next year. American lawmakers finally agree on a $2 trillion stimulus package, the largest ever in history. The fight against the virus is going to be bolstered with direct payments to Americans and a fund to shore up smaller businesses. Senate will vote on the bill soon. Markets cheer the move. those are the headlines we are going to be tracking for you all evening on ET Now. Let's get you a ground report meantime of what the implications are of the lockdown that was announced by Prime Minister Modi. Well, firstly, of course, supply chain disruptions. There are long queues as well outside grocery stores and some hurdles in essential services. That's what's marked day one of the lockdown that was announced by Prime Minister Modi yesterday evening to fight coronavirus. We saw scores of people rushing to grocery stores despite the Prime Minister's assurance that essential services will not be impacted. In Maharashtra too, Chief Minister Uddhav Thackeray started a helpline dedicated to help people with essential services. Now, unfortunately, online retailers like Grofers, Amazon, Flipkart have had to shut operations. FMCG companies like HUL and Nestle as well have warned of supply constraints in spite of the government's assurances. But what exactly is it looking like on ground? Let's first bring on board Utkarsh Chaturvedi. He's actually at the Dahisar Check Naka outside of Mumbai, which is one of the main entry points to the metro city. Utkarsh, first up, I understand that you were stopped by the policemen. They were asking you why you were out on the road. Tell us what happened and what did you observe at the Check Naka?
So at this point of time, I am right now on the highway which leads to Dahisar, and I'm on my way. I was on my way for there and trying to report about the situation, the supplies and all the trucks which are coming in from the Check Naka. When I reach the location when there is that Check Naka, and when the policeman stopped me and I told them that I am from the media and I had my ID card right in my pocket. Despite showing my ID card, they asked me to hang the ID card, and I told them that I do not have something which I can hang with. Without really questioning, the police started beating me with the sticks. I was alone on my motorcycle trying to report on my mobile kit, and it was almost a couple of times it happened that all the 3-4 policemen really gathered above me. I had no other option but to move out of that place. It's right 1 kilometer away from here. So clearly there's been a lot of checking, but it's not only me. I've seen a lot of policemen really raising sticks on other people as well, and at times without really asking. And I've been hurt on my hand and the back, but that's the situation right here when it comes to the Check Naka. While we were reporting, and it was clearly mentioned that reporters and media professionals are exempted from this clampdown when you speak about the lockdown. But unfortunately, the Mumbai police doesn't seem to be cooperating a lot with the media people.
All right. Meantime, my colleague Neha as well is out and about in the city of Mumbai. Neha, are you witnessing panic buying by individuals, by customers? Is there really that fear that they'll run out of essentials despite the Prime Minister's assurance?
No, that's right. We're standing outside a Reliance Smart store here in Kharghar, Navi Mumbai. What we've been told by the authorities is that this is the only store that has been allowed to stay open in Kharghar today to better manage the crowd that had gathered outside the stores in the morning after Narendra Modi, the Prime Minister, announced a 21-day lockdown for the entire nation. What we've been told is that a coupon or a token system has been put in place here. At a time, only 50 tokens are being issued and only 50 people are being allowed inside the store. Once those people come out, more tokens are being issued. So all of the crowd that had gathered outside has been sent back home by the police authorities that have been manning these stores. They've been asked to come back at 12 o'clock when new tokens will be issued. But just to give you an understanding of what is happening, you can see not a lot of crowd here. So I think the crowd, especially here in Kharghar, is being controlled properly. This is the only store that I've been told is open, but we will go out and we will check if there are any other small grocery stores in neighborhood areas that are open, and how those particular stores are managing to control the crowd.
All right, that's of course from Mumbai. Now my colleague Parisha Tyagi is joining us from Jaipur. Parisha, what sort of scenes are you witnessing over there?
Yes, I am currently in Jaipur and I am standing in Mansarovar, which is one of the largest residential colonies of the country. And this Mansarovar market on regular days is one of the busiest markets of the city. But right now, as the whole nation is under a lockdown, the market also is, all the shops have closed down, of course, except the grocery stores. The streets are deserted and people are not coming out of their house unless they have to buy their essentials. However, when it comes to buying the essentials, although the turn up has thinned down now, what we are picking up from the store owners is that in the evening yesterday there was a huge rush of people who panicked to buy their essentials, to buy the grocery. Although the government has been reiterating that the essentials will continue to be provided to citizens, people have panicked now, and in the morning also they did a lot of shopping. They wanted to make sure that they have enough supplies for this 21-day lockdown period. Coming to supplies, the departmental stores are catering to the buyers right now, but they also look a bit worried about their supply chain, as they say that right now they are getting stuff, they are getting commodities from neighboring state, but with the factories going through a shutdown, there might be a problem in the coming days. Hope the government ensures that at least the essentials are not going to be a problem. But behind me is the shop, there is the go down. They have enough supplies for now. We also see vegetable vendors in the market, although there is a complete shutdown, but the essentials are being provided. Turn up has thinned down for now, but in the mornings and in the evenings, people really come rushing to shops to buy as much as possible. So yes, this is the current situation in Jaipur market.
All right. Thank you so much, Parisha, Neha, and Utkarsh for joining us with that live ground report. Just once again, a plea from all of us at ET Now to our viewers. The Prime Minister has assured that essential services will be available. Do not panic. Do not rush out to your grocery stores, because that simply defeats the purpose of, physical distancing of a lockdown. It's extremely important everybody remains calm. Groceries/essential services will be available. Do not hoard either. That's extremely important as well. Okay, well, continuing with the measures being taken by the government to sort of ease doing business, ease of compliance during this crucial period. Yesterday, the finance minister announced a whole host of measures, right from extending the due dates for a lot of compliances, tax payments, TDS payments, among other things. Along with that, there's also ease in GST return filing. There is a cap put for NRI income tax, among other things. So let's discuss all of these provisions one by one. I'm joined today on the show by Mr. Ved Jain, former ICAI President, via Skype. Mr. Jain, really appreciate you joining us on the Money Show during these tough times. I hope you and your family are safe at home. Mr. Jain, I would like to start off with that one relief that has come in, I suppose, for those people who have not done their tax planning in advance, and that's the delay in the last date to make your tax saving investments. It's supposed to be done by the 31st of March. Now it's been postponed to the 30th of June. This is for fiscal year 2020. That's March 2020. If you could talk to us, is there really this tendency in India today as well that we wait till the last moment, to the last 10 days before we make that PPF investment or the RLSS investment or whatever mode of tax saving investment that we'd like to make?
Yes, you see, this time has been an unprecedented time. The law prescribes that you can make an investment up to 31st March to get benefit of the various exemption and reduction which are available under the law. And post 15th March, we have been saying many challenges have come up. There's a lockdown, offices are not open, people are not working and finding it difficult. So that was a major issue which has come not only with the taxpayer but with the tax administrations also. And considering this fact, the finance minister yesterday announced that whatever your obligation is arising on or after 20th March, and which was supposed to be done before 31st March, or say before even 29th June 2020, if you comply those provisions or those obligations by 30th June, it will be considered to have been done in time. And that's why in case you are supposed to make an investment, say life insurance premium, public provident fund, or NPS, National Pension Scheme, etc. All everything you can do up to 30th June, and that will be considered to have been invested before 31st March 2020, so that you can claim the benefit of that exemption also. In line with that, the finance minister also announced that you are supposed to file your tax return, which otherwise is supposed to file 31st June, 31st July, or 30th September. In case you have not filed, and you can file, the last date was 31st March 2020, you can do it by 30th June 2020. So all notices, orders, obligations which under the law, whether as a taxpayer or as a tax administration, were required to be done after 20th March and before 31st March, now they can be done up to 30th June. That's a big relief which has been given because of this unprecedented situation which has arisen in India, I will say globally, on account of this coronavirus.
Right. Mr. Jain, there are other, you mentioned about the whole return filing delay. It's actually supposed to be either 31st July or 30th September. And the last date is 31st March 2020 for the fiscal year 2019. Now, obviously, there's going to be an interest as well under Section 234A for the delay in filing of the return. Does that continue, or is there some sort of a, allowance over there as well, Mr. Jain?
See, when you see that 234A, because the due date is 31st July and the 30th September. So that meter is already on. The finance minister has clarified that the rate of interest will be reduced from 12% to 9%, meaning thereby the interest rate which otherwise is applicable in 234A at the rate of 12%, that will not be applicable. Now that will be 9%, meaning thereby 0.75% per month. That's a interpretation which is coming up. I'm reasonably sure when the notification officially comes up, it will be clarified that what does this mean. Finance Minister also said that all what you are supposed to pay by way of advance tax, by way of TDS, tax deduction at source, by way of self-assessment tax, now this extended period, in the extended period, the rate of interest applicable will be 9% as against 12%. So I am assuming that for 234A also and 234B also, which is normally for the delayed payment of taxes and delayed filing of return, the tax rate applicable will be 9% and not 12%. So it is not a complete waiver, it is a partial reduction. However, there will be no penalty leviable on account of this for delay for 3 months. And I may just clarify that this penalty stand already delayed leviable because the law prescribes that in case you have not filed the return before 30th December, then the penalty is leviable. So penalty has been waived off, or no concession, no postponement of interest, only reduction of the interest from 12% to 9%.
Okay, so there will be interest imposed, that's for sure, but it's going to be at the rate of 9%. Earlier it used to be 12%. This is of course on payment of tax as well. The interest rate has been reduced to 9% instead of 12%. Now, Mr. Jain, the other big proposal was of course the Vivad Se Vishwas scheme, which was introduced in Budget 2020. There was a date of doing that declaration or opting for this scheme up to 31st of March, and then there was up to 30th June as well. You had to pay a certain amount. You had to pay the tax amount, and the interest and penalty amount is waived off. You just have to pay the tax amount, and if it's after the 31st of March, then you have to pay an additional percentage. If I'm not mistaken, it was 10%. So now that as well has been delayed, if you could just explain what does that mean? I mean, can an assessee opt for Vivad Se Vishwas even after 31st of March and not have to pay that additional 10-odd%?
You are absolutely right. This Vivad Se Vishwas scheme had two parts. In case you make the payment and make a declaration before 31st March 2020, then where you were supposed to pay only tax and nothing else. And in case of penalty, you were supposed to pay 25% of the penalty. And beyond 31st March, there was a provision that you were required to pay extra 10%, that is 110% of the tax. And instead of 25%, 30% penalty. Now, the finance minister has extended this period to 30th June without additional obligation of 10% tax or payment of penalty at the rate of 30% instead of 25%. Now, under this scheme, any person can make a declaration up to 30th June 2020, and all what need to be paid is only the tax amount, not additional 10%, which was earlier supposed to be. And similarly, in case there is a dispute on penalty, one has to pay only 25% of the penalty as against 30%, which was earlier part, in case the payment was before after 31st March. So that way, what has been done is 31st March 2020 has been shifted to 30th June 2020 with a normal tax rate and normal penalty provision of 25%. And that's a big, big relief. Now 3 months have been extended. I may just clarify that this scheme already got delayed. It was introduced on 1st February 2020 when the budget was presented before in the parliament. But later on, because of the recess and then later on some parliamentary procedure, this scheme got notified only on 18th March. So the time left was too little, and thereafter this corona issue has come up and the country is locked down. So that's why there is an extension of 3 months. Now I believe all taxpayers can take a relief, and they need not to rush through and to file this declaration. They can wait, and after post-lockdown, they can file this declaration.
Okay. All right. Mrs. Jain, let's also talk about on the corporate tax front. Is there any relief provided over there? Dividend tax, of course, has not been abolished, but I think for REITs and InvITs, there has been some leeway that has been given. If you could just explain that to us, sir.
Yes, you see, that is a part of the amendment which the finance minister has moved while consultation and approval of the finance bill 2020. We all recall that on 1st February 2020, the finance minister has introduced the finance bill. And in the finance bill, she has taken a bold move, abolished the dividend distribution tax, which was payable by the corporate while distributing dividend. And in lieu thereof, the dividend income was tax-free in the hand of the shareholder, and only 10% tax was to be paid in case the dividend income exceeded rupees 10 lakh. That was the provision. The finance minister has proposed that now onward there will be no dividend distribution tax, and dividend income will be taxable in the hand of the shareholder as an ordinary income, maybe at 10%, 20%, 30%, that is the applicable tax. Now there has been a problem which has arisen in respect of the business trust and the investors trust which has been created, and there they get a dividend from the what we call SPV. Now that confusion was there. If you have a section 1023 FPD, so that section has been amended and the clarity has been given. Now the dividend which is to be received by these business trusts, REITs, etc., it will be a pass-through. It will be the same provision which was earlier, which probably was somewhere a technical lacuna which has been left in the finance bill, now which has been rectified in this amendment which has been moved by the finance minister. There is no other change. Further, one thing has been clarified in the budget in this amendment. There was a confusion in case a company has distributed dividend or declared dividend in the same month of March 2020, but that dividend reaches in the hand of the shareholder in April 2020. So there was a possibility of a double taxation. That company will pay dividend distribution tax while distributing dividend, and the shareholder may have to pay tax on dividend because it has been received in the next year. So it has been clarified that in case a dividend has been declared or distributed by the company on which DDT has been paid, and that dividend subsequently goes into the hand of the shareholder will not be required to pay tax because it is already suffered dividend distribution tax. That's the amendment which has been also moved by the finance minister.
That's an important clarification actually on that dividend bit. So I hope all of our viewers paid attention to that bit. If the dividend has been declared and given to you, the shareholder, after DDT has been paid, then obviously you do not have to include it in your total income and offer it for tax. It's only that dividend which will be given to you without DDT being deducted. Only that has to be offered for tax. So it's an important clarification from the FMO. All right, Mr. Jain, I want to talk to you now about that contentious budget proposal that was put to tax NRI income. There's a threshold put over there, plus there's been some relaxation on the TDS on foreign remittances as well, which means money that you send abroad. If you could walk us through what are the details over there.
See, there was an issue which has arisen post finance bill introduction in the parliament about the non-resident. We all know that non-resident are supposed to pay tax on income which accrues and arises in India, and income which accrues or arises outside India is not chargeable to tax in the hand of the non-resident. Now, in this finance bill, there was two amendments which were proposed. One was that in case a person who comes to visit in India during the year, and that period earlier was 182 days to fall in the status of a non-resident. Now that period was proposed to be reduced to 120 days, with the meaning that many non-residents who have been living abroad and they have been coming back into India for a visit to look after their family, to look after their assets, or because of other social obligation. So that period was supposed to be curtailed to 120 days as against 182 days. And then there was another contentious proposal that in case a non-resident is not liable to pay tax in any of the country because of the residence domicile, and such non-resident is an Indian citizen, now in that it was proposed that he will be deemed to be a resident, with the implication that such person will be liable to pay tax on the global income, including the income which accrues and arises outside India. This has created a lot of hue and cry for all the non-residents who are working particularly in the Middle East area, and they were getting confused that since their income is not chargeable to tax in their home country where they are living, that they may be taxed in India. Now, in this amendment, the finance minister has clarified that it was never the intention to tax those non-residents in that manner. Two major changes have been made on that part. Firstly, now this period of 182 days to 120 days is not being reduced across the board. This period of 120 days will be applicable only in respect of those non-residents which have income from other than foreign income of 15 lakh rupees or more, meaning thereby such non-residents who do not have income from India of more than 15 lakh rupees, they need not worry. It is only the non-residents which have income from India, that is income other than foreign income, they will fall in this category. In case they visit to India for more than 120 days, they may be considered as a resident. But their category will be resident, but not ordinary resident. If that be so, now another category has been made that they will be liable to pay tax only on such income which has accrued or arisen because of their business controlled from India or a business profession set up from India. So these are the major changes which have been effected by the finance minister while getting approval of the finance bill. And I believe this now addresses the issues and the concerns of the all non-resident, because such category of persons will be very few, and only those who are carrying on business outside India, but such business are being run from India, only those persons will get now fall in this category. This is the major change which have been made by the finance minister.
So global income is out of the tax ambit. That is something that the FM had clarified even just a few days after the budget. And even for your income earned in India, not foreign income earned in India, there is a threshold of 15 lakh rupees. So if you're earning up to 15 lakh rupees in India, it's non-taxable, but more than 15 lakh rupees would be subject to tax. Oh. Mr. Jain, thank you so much for joining us and sharing your explanation, the details of all the announcements from the finance minister yesterday. I suppose from an individual assessee perspective, one of the most important ones are going to be the fact that if you've not made your tax saving investments now for FY20, that's March 2020, you have time now till the 30th of June. But that does not mean you delay. You always have online banking facilities. It's a click of a button and you can actually transfer money into your PPF. So if you've not done that, once again, don't wait till the end moment. Do it right away. Well, with that, we will take a very short break. Stay tuned to ET Now. We are going to get you an expert perspective on managing your mutual fund portfolio amidst the carnage.